It's about that time of day again. Back in the action once again. Hope you guys had a great weekend. Back in the action though here. Final few drops of the summertime season. It's time to get back to work. Got a lot to talk about here tonight on the video tonight. And of course, it's Monday evening. It's August the 26th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you forgot, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. I have a very important job tonight. My job tonight is to identify the best levels of support and resistance, the best entry setups, the best exit prices, and of course, the most important traps to avoid tomorrow so we can keep the money we're making in our account, right? And we're going to a lot to cover here tonight on the video. We're going to grab some oil, some S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to jump into oil first here tonight. Oil, as you probably noticed, went shooting higher here in the pre-market here from Sunday, Monday morning, and then slowly but surely collapsing right back down. But it's not so much the up and down price action, it's the sideways range that I really think oil is most important for tomorrow. Let's grab that Texas tea, that black gold, that crude oil futures, and let's see what oil's telling us here for the best setups and things we need to avoid for tomorrow. Now, like I mentioned earlier, it's pretty easy to see here. We came out on Sunday, right? We gapped down Sunday evening. And then, of course, Monday, we just rally, right? Red hot on Monday. But look what's happened, right? We have this trading range here. I mark up the amount below the range, the amount above the range, and look where, right? Look where those buyers, look where they stalled out here. Now, of course, we saw this coming a mile away in our trade room this morning, and so we knew better than to be buying into these highs here. And then, of course, once we started seeing this, right, move back down, we knew, okay, now we're headed back into that trading range. So we know, of course, right, we're bearish right now after going up and then 1, 2, 3 reversal. We know we're bearish. We know I want to be a seller. I want to sell at resistance. But the most important thing right now is going to be that trading range. Range-bound markets tell me I want to buy low. I want to sell high. And of course, I want to avoid that middle. So right now, we look great here for a sell. I'm looking for a sell up inside that battle zone. I'm going to talk about two different types of entry setups. I'm going to look for to sell short here on oil. I want to stay away from that middle, avoid that middle. That'll be choppy here tomorrow. And then ideally, I'd like to get a nice move lower, retest that low, and then buy off of that low. Now, trying to be a buyer in a bear market is a little bit technical, so we're going to go into a lot more detail on these specific type of buy patterns I would look for in a bear market. But we definitely have plenty of opportunities setting up here for tomorrow, Tuesday's session. And we're going to break down both the buy side, the sell side, and we'll also talk about what a possible breakout might mean, how to trade that breakout on oil tomorrow. Over on the S&P here tonight, S&P is the opposite, really. It is bullish, as you can see here, right? Very strong bull market. And of course, that bull market spent most of the day today chopping around inside of this real narrow range. You could definitely feel the tension. Remember last Friday, before we went to the weekend last Friday, you would have thought that the trade war had all out escalated on Friday afternoon last Friday. And by the time we came in this morning, you know, two countries, the U.S. and China, were buddies again. So I think the market was a little bit confused by that this morning. I think everybody was expecting to see bullets flying and, you know, bloodshed everywhere. But it was kind of a calm market. I think the S&P and the Nasdaq kind of felt that, right? They were like, wait a second, what happened to all this? What happened to all this tough talk last week? So the market kind of sat there for a while. And you could definitely see the market is overall bullish, right? Buyers were coming in. They bought the failure right below that low. So buyers are definitely waiting down here to buy low. But look what's happening. They're trying to push higher here right now. A horrible place to be buying. Not only do I not want to buy right into that previous high here, but I'm also right above the top of this range. So I definitely don't want to be a buyer up here. I know we're bullish. I do want to be a buyer, but I really don't like being a buyer up above the top of a trading range for many reasons. We'll talk more about details on that as we get into tonight's video. But really, I'm looking for one very specific pattern to qualify the breakout. So I am willing to buy as the market goes higher. Actually, not one pattern. I've got two patterns here we'll talk about on that breakout running higher. Two things to look for as the market runs higher. I wouldn't mind selling this either, right? I wouldn't mind selling off this high. I've got one very specific counter trend pattern that I'll look for to sell off this high. And then, of course, if we can get back down to that low, I'd love to buy down at these lows. Now, if we can get a full rotation, right, if we can get off this trend line here, that'll be a pretty deep pullback. And so with that deep pullback, I've got two very specific entry patterns I always look for whenever there's potential for a deep pullback. But I'm definitely looking for a deep pullback here off the high. I'm perfectly comfortable being a buyer here as we go higher. I just need to see a little bit more proof, and we'll talk more about that and all the details of that tonight on this S&P. Nasdaq is in a very similar position. We know we're bullish. We spent most of the time today chopping around inside of this range. You can see the buyers are hungry, right? They're buying anything that gives them a chance to buy underneath that range. You know, it's a range-bound market right now with a bull bias, which means buyers are going to be waiting here to buy off of these lows. I've got a couple patterns I'm looking for to buy off of these lows. Also, too, we can sell off of this high, but remember, you're trying to go against that trend. So if you're trying to go against the trend, you're going to be a little bit careful. We'll talk about these specific patterns, look for to sell off that high. But do we keep going higher? What's the best pattern? I've got two entry patterns I'm looking for as we go higher. And where's the next target? You know, where are they actually trying to go up there, right? Where's our best exit for the target tomorrow? We're going to talk about all those details, right, on this Nasdaq tonight. So make sure you stay tuned if you're an NQ trader like we are in our trade room. And then how about that gold? So gold, I think, really sums up just a bit of confusion in the markets right now. Again, like I said, last Friday, right, you would have thought the U.S. and China were going to start firing bullets at each other, right, in this trade war. There were some very strong words mentioned right last Friday from both sides of U.S. and China. You can see gold. It definitely was preparing for the worst, right? Look at that thing blast open on Sunday night. And it's almost like the market said, wait a second, maybe things aren't as bad as they sounded. And they kind of came crashing back down. And, of course, into that trading range. So it's tough to call this a bull market right now. We are overall bullish. I mean, look at that. Yeah, just a little bit overall bullish there. But it's very, very easy to see, though, the short-term momentum right now is very much bearish into that trading range. It's a range, obviously. It's a range scenario here. I want to sell high. I've got two, maybe three different patterns to sell high there. I've got same thing down here, right? I want to buy low. This will be a relatively interesting opportunity for us to buy off the low because we've got long-term buyers. Obviously, it's a long-term bull market, but short-term sellers. And those sellers, they got their eyes on that pendulum swing. So this might be a relatively shallow pullback. We'll talk about this best plan for that. It may also be a very deep pullback as well, and we'll talk about how to trade that as well. Either way you slice it, though, as the market goes lower, you can definitely bank on buyers coming in and trying to buy this dip right now. And we'll talk about some key patterns and key setups to look for tomorrow morning on the gold. And then, of course, wrapping up here tonight, how could we forget about that mighty euro, right? The dollar, of course, got hammered in the wake of the Fed speaker's announcement on Friday. If you recall, we had Jerome Powell on Friday, and he talks about interest rate cuts. And, of course, the dollar tanks, the euro jumps on Friday. But you can definitely see that euro definitely doesn't believe what it heard on Friday because we get that 1, 2, 3 reversal now. We're definitely bearish right now on this euro. We're not incredibly bearish, but we may continue going lower. If we continue going lower, I've got a very specific entry setup I'm looking for if we keep going lower. But really at this point, though, I've marked up these lows up at that high, and I'm looking for a sell off of that high here on that euro. There is one potential possibility here, and that is this trading range. So we'll kind of talk about what if the market kind of sits inside that range for a while. So we got the up, the down, the sideways, right? We'll cover all the details here, how to buy it, how to sell it, how to trade the breakouts, and when to do nothing at all here on that euro. So plenty for us to talk about tonight as we break open this last full week of the month of August. Euro, gold, Nasdaq, S&P, and crude. Before we jump into the video tonight and put all of the plan together for tomorrow morning's trading session, I just want to remind you that right before I publish this video on our YouTube channel, I always send out an email to all of our best clients on our mailing list. And I want to make sure you get that email as well. That way you know exactly when our nightly newsletter goes live. So here's what I want you to do. Join our mailing list. That way you always get the first crack at that nightly newsletter every evening. And all I need is your name, a real email address, and then hit that subscribe now button on the right-hand side. And don't forget, when you subscribe to join the mailing list, your job ain't over yet. You've got to go in and check your email, because in that email, right, I'm going to send you a welcome email with a verification link. I need you to verify that you get that welcome email. And sometimes those emails get stuck in your spam filter. So if you don't see it there in your inbox, check your spam filter. It may just be there hanging out with you right in the spam filter there. So join the mailing list. That way you never miss another great video here on our blog at Sideways Markets. And then real quick, before we jump into the lesson here for tonight, I have a question for you. Down in the comments section below, if you could go back and turn back time, what would you do differently this second time around? Or maybe you're like me, you know, I'm not proud of this. It's kind of embarrassing, but I blew my first 3 trade accounts, right? So if you've blown a few trade accounts, you're not alone. It's almost like a rite of passage as being a new trader these days, right? I blew out a couple trade accounts when I was a rookie. I know what I would do over again. I know what I would definitely not waste my time on. I know exactly what I would have focused on if I did it over again. But I want to hear from you. Down in the comments section below, drop me a comment. Let me know if you could go back and do it again based on knowing what you know now in your infinite wisdom. What would you do differently, all right, another time around, right? If you went back and did it a second time around, or maybe you're like me, a third or a fourth time around, what would you do differently this next time around? Drop me some comments in the comments section below, and maybe you are a brand new trader and you haven't blown your account out yet, right? Good for you. Stay true to risk management, okay? But what type of advice do you need? Drop that in the comments section below. So if you're a brand new trader and you haven't, right, and you haven't messed it all up like most of us have, right, at least a couple times in our career, what's the most important obstacle standing in your way right now? Because I want to know how I can make this newsletter the very best place to learn and earn every evening on our blog here at Sideways Markets. And while you're down there in the comments section, guys, if you tune in every evening and watch this video, give me a thumbs up on the video tonight if you would. Because believe it or not, every time you hit that thumbs up button, it helps me to expose this video to more traders who want to learn this 3-step strategy as well. So drop me a comment in the comment section below. Hit that thumbs up, because every time you hit that thumbs up button, it helps me expose this video to other traders who can definitely learn it, right? In the meantime, though, don't forget you can always call me if you ever have any questions. Okay, any questions about our free pass to our trade room, any questions about our free trading classes, any questions about joining the morning session and trading the strategy with me as a client, any questions about brokers, charts, data, whatever, right? Call that toll-free phone number. Use that live support tool. I'm always here to help out every step of the process. All right. In the meantime, let's get to work here, kids. We got a lot to cover here tonight. Last couple drops of the month of August. We've got Labor Day weekend coming right around the corner now. Basically, the way this will work is Monday, Tuesday, Wednesday are going to be the most active days of the week. Thursday and Friday. Thursday will be a little bit slower, but Friday is really going to be the day this week where you've got to have a really good reason to be trading right after 10:30, 10:45 on Friday. Friday will probably be a relatively small window of opportunity. We'll talk more about that as we go, but if you're looking at this as a week ahead, tomorrow and Wednesday are really going to be the meat and potatoes here this week. Thursday morning, we get some news on Thursday morning, but really it's going to be Tuesday, Wednesday, the first half of Thursday. Friday's going to be quiet because you've got Labor Day weekend. And next Monday is a holiday. Now, if you're outside the U.S., if you're in Europe, you're probably on vacation right now. A lot of Europe, right, is on vacation at the end of the month of August. We already know that. But here in the U.S., though, this is a very popular holiday. It's the last gasp of air before we all go back to work, right, full time in the month of September. The kids are going back to school, right? They're cleaning off the beaches. Everybody's going back to their offices, right, and getting back to work because, of course, you get the holiday season right around the corner. So last push here of the summertime season. Expect to have some good price action on the trade here Tuesday, Wednesday, first half of Thursday, and then we'll go into the end of the week here as we go into that holiday weekend. And we'll talk more about that, obviously, as we go. Tomorrow, of course, is Tuesday. It's August the 27th. You'll notice there's not a lot on the calendar tomorrow. If I had to guess, we've been seeing a lot of movement around 10 o'clock lately. So without any major news tomorrow, we got the Case-Shiller home prices at 9 o'clock. We got some home stuff at 9 o'clock. I don't expect that to be the market mover tomorrow. I do expect that 10 o'clock top of the hour. We call it the 10 o'clock shock in our trade room for a reason. I do expect that to be the kind of the juicy, right, the nice juicy moves tomorrow, right, coming off of that 10 o'clock top of the hour. So no major news tomorrow, but obviously it's been back and forth between the Fed and rates. We've got OPEC and oil. We've got, in case you've been paying attention, right, China and the U.S. and trade. So there's a lot of things going on right now that we are listening in every day, right, on our news feeds. There may not be any scheduled news for tomorrow, but that doesn't mean, though, there won't be another big announcement from the U.S. and China trade talks, or the Fed and rates, or OPEC, right, in crude oil. And of course, tomorrow morning we'll be in our trade room, same time, same place, every morning, 8 o'clock Eastern time, like we've been doing for over 11 years here at School of Trade. And our favorite markets in the trade room are right where you see in front of us: crude oil, S&P, Nasdaq, gold, and euro. Let's start first here by talking about that plan here on oil. Now, I mentioned in the introduction we had that gap down on Sunday evening. Remember, guys, the markets actually open up on Sunday at 6 o'clock, and they go all the way through that close on Friday at 5 o'clock Eastern time. They gap down here. They slingshot higher. Right, and as they're slingshotting higher here, the buyers are, right, strong run up. The buyers buy the pullback. They retest the high, and that was pretty much all they got out of it. After about 9:30 this morning, the market took a nosedive here. We anticipated this a mile away here, as I mentioned earlier. We kind of picked up on that being a range. We marked up the amount below the range, found the amount above the range, and pretty much knew that was going to be a tough area for those buyers to crack. And then once we got that reversal, we pretty much knew, okay, now it's time to sell this market as we go back down in. You'll notice the bears pretty much took control and had held control for the rest of the session this morning, and we pretty much just kind of finished up right back at the low of that trading range. So we're down here now at the low of that trading range. I know we're bearish. There's no doubt about that. I definitely don't want to sell into this area of support. I want to sell at a level of resistance in a range-bound environment, right? I find my range. I use that range to tell me where my sell zones are above, my buy zones are below, and it's pretty simple, right? I want to sell high, I want to buy low, and ultimately I want to try to stay out of this trading range, right? That's why I call it the no trade zone. Now, we can safely assume that these sellers are trying to get back down to retest that low at 52.96. And if the buyers can take back control of this, they're trying to go back and retest those highs. So we know where the sellers are trying to go. We also know where the buyers, right, bless their soul, where they're trying to go if they can take control of this market again. But let's talk about being a seller here. I need to find an area of resistance right now to be a seller. I've got a strong move down. I know anytime I see a strong move down, I'm probably going to get another leg. So I'd like to find a level of resistance that I can use here to avoid trade in the middle, right? I don't want to trade inside the range. I want to get up outside the range, And I think we should be able to get this trend line coming down. It lines up nicely off of those lows. Grab that trend line, move it up to those highs now. And of course, now we got that, right? I can now use this now as a hidden channel. And so I like the idea of selling off the top of this channel. And more importantly, I can start to anticipate, right? As we go back to retest that channel high, now I would anticipate now that moving average comes over. And I'll bet you're going to see buyers try to buy that pullback, right? I'll bet you will. I'll bet that move higher, pull back to that moving average. I'll bet we see a lot of buyers trying to buy off that moving average. And if they do, we now know where their stop losses are going to be. And now we can look to sell into those stop losses. Now, the only problem I have on this is simply staying out of, like I mentioned, out of the middle of this trading range. So if we get that pull back, moving average comes over, I get those buyers now to try to buy off the moving average. Again, thinking this is a bull market or a bull breakout. The buyers come in, try to buy that pullback now. Now I know where their stops are. Okay, now this is where it's very important that we pay attention to the small details, because what I'll do in these types of situations is I do want to sell right below that low, right? I want to sell right where the buyers would ultimately have their stops. The problem with this situation, though, is it's going to be right inside the middle of that range, right? So what I'll typically do is I'll wait for that failure pattern to trigger, and then drop a limit order on right at the top of that range. And it will usually come right back up and allow me now to get in short right off the top of that trading range. So this is one of those relatively rare occasions where, right, we have to kind of thread the needle. I want to see it go up to the top of the channel. When it gets back to the top of the channel, the buyers will try to buy the pullback. I now know where their stops are. I want to sell right into those stop losses now with a failure pattern, but it's not a great spot to sell. So what I'll do is I'll wait for the trigger, drop my order in just above the high of that range, wait for it, right, and get that what I call a limit in entry off that high, right? It's called a limit in entry. Once the market shoots lower for me, I then take a sell limit order, drop the limit order in, put it right up above the high of that range. And I'll tell you, a lot of times it'll come right back and then run right down to that low there. Now, there's another option on this. Let's say, for example, we don't get the sell right off that channel. Let's say we actually jump, right, in the overnight for whatever reason, right? The market jumps higher here. Is that a bull market yet? No, it's not a bull market until the buyers can actually hold that pullback, and we'll talk about that in a moment. But if they do jump as it goes up, now what I'll do is I'll use a slightly different sell pattern. It's called a nested variation. I'll wait for the buyers to try once. I'll wait for the buyers to try twice, right? Now pay attention kind of how this is drawn up, right? 1 and 2 here. I want to see lower lows like that, right? Lower lows, buyers want to buy low here, right? So buy 1, buy 2, and then I can sell from there. And again, same idea. We're selling into the stop losses of the buyers, which is why it's so important we wait for those buyers to try a couple times, right, before we start selling into that failure. Now, what would it look like for a bull market? What would a bull market look like? How would that turn into a bullish market? We'd first have to see a strong move higher. Then the moving average comes over, and the buyers would have to hold that pullback. If the buyers can hold that pullback and make a jump, if they can jump off that moving average, right, give me some nice momentum, perfect. Now what I'll do is I'll mark up that high. I'll mark up that high, bring it off that low, bingo, and now I can look to buy off of that low. Does that make sense, right? I call this a 1, 2, 3 reversal, right? It's a 1, it's a 2, and a 3. It's a strong move up, a pullback to the moving average. I'm not trying to buy that pullback. It's not a bull market at that point, but I will look to buy that pullback once we get that 1, 2, 3 reversal and that run higher. There is another aggressive way to do this. If it really jumps and runs, you've got your 2 try breakout. That's a strong move up with a 1 try for the bears, 2 try for the bears. Make sure you get 1 and 2 higher second try, right, and buy from there. right? So strong move up, that's the difference, right? Got to be a real strong move up, bears try once, bears try twice, right? And you're buying into that second try. The first pullback is profit taking, second pullback is usually actually sellers, and we're buying into that failure. Now, what if I'm wrong about the market going higher here? What if it goes sideways? If it goes sideways on us, we really don't want to do much inside this range. If it goes sideways, we're still a bear market into a trading range. And so if we go sideways here, now I want to, again, sell high. And I want to focus on what I call the two-try failure pattern. I want to see price try to go higher, get that moving average coming over, get those buyers to now try buying off the moving average just like before. And now, yep, we're going to look to sell right into that failure. We call this a two-try failure pattern. Buyers try once, buyers try twice, and then we're selling back down into that trading range. Or what if the market runs lower here? Can I buy this thing going back up? I can, just I got to do a little bit different, right? A little bit different setup there. I've got that low there, right? I've got that low here, 52.96. So if we keep going lower here, right? If we keep going lower here, how can I buy off that low? A very specific reversal pattern I call a crown reversal. I want to let the sellers try once, higher low, higher high, sell twice, trap low to buy off of that low, right? This is a very specific pattern. I call this a crown reversal pattern. It's pretty simple, right? Not too bad. If we do finish off that pendulum swing retest, look for those sellers to try once. They're not going to get a retest of the low. Okay, that then sets up the crown reversal. Let them try twice. And again, notice how I'm drawing them at higher highs there. And then it's a trap low, right, off of that low to be a buyer off of that low here, right, to be a buyer off of that low. So that's how I'm looking to buy off of that low. So, boy, as we stand right now, just stay away from that middle. We're looking to sell up around that high, right, with that failure and that nested failure. We're watching for that 1, 2, 3 reversal and that hidden channel or the crown, right, off of that low to buy off of that low. All right, now got the S&P coming up next. Before we jump into the Emini S&P though, I want to give you a much deeper dive into all the patterns I've talked about, the failures, the pullbacks, the 1, 2, 3 breakouts. Here's what I want to do. I'm going to put a link up here in the upper right-hand corner for our free trading course. This free course will teach you what I call my 3-step trading strategy. You'll also learn my 4 favorite entry patterns as part of that free course. I'll also put a big red button to register for that class right below the video tonight on our trading blog. So either grab it with the link in the upper right-hand corner or hit that big red button right below the video tonight on the blog and grab that free trading course. And just a note about the free trading course, guys, I'm going to send you an email for that free course. If you don't get that email, it might be in your spam filters. So don't forget, sometimes those emails for the free trading course, they get trapped in your spam filter. So make sure you check your spam filter there if you don't see that free class. Next up here, how about some S&P right now? So S&P, as I mentioned earlier, I think got a little bit confused by some of the verbiage, some of the verbals going back and forth between last Friday and this Monday, because like I mentioned in the introduction, we finished last week and it sounded like the U.S. and China were going to be in an all-out brawl over tariffs and tit for tat back and forth. And this morning comes out, right, and we're like, nah, everything's cool, right? Xi and Trump, they're like buddies now. They're homeboys now. And so it was like, what is going on? You could definitely feel the market kind of felt like that this morning as well. They're like, okay, so we're not, we're not burning each other to stake anymore. Apparently, everything's kind of become civilized. Apparently, they are listening to whoever's giving them good advice in their ear right now. Calm down is definitely some good, wise advice to both sides of the table. But we know things got a little bit weird today. Bullish market, obviously, into a trading range. That's the most important part of this chart. It's a bull market overall. Right? We're into a trading range. Whenever I have a range like this, it's a very, very narrow range, you'll notice, right? So I want to get a nice deep pullback to buy low, right? Always want to buy low in a range. You can see they did that already earlier with that classic 1 try, 2 try failure pattern off of that low. So we definitely know we want to be a buyer down below the low of that range, right? Trading ranges, buy low, sell high, avoid the middle, right? We'll avoid that middle like the plague. We definitely want to stay away from that middle because it'll be tough to stay with that because it's such a narrow range there. And then as we go higher here, again, you want to, let's put it this way, you don't want to be a buyer up here. That's for sure, right? Not a good spot to want to be buying this market right now. Now, we might get some proof to be a buyer here, but we definitely don't want to bank on a breakout because as you probably have already learned, most breakouts are not going to survive. So we definitely want to be a buyer here right now. I've got the potential here for a sell if we can get a sell here on this. But for the most part, though, I want to get this market pulling back here so I can buy off of that low. So let's see if we can't kind of zoom in on this a little bit closer here. And again, I'm trying to get that, right? Trying to get that pull back. Now, as we pull back, I think a lot of this is going to have to do with how the market pulls back. And just so you know, I'm kind of watching that Friday close. I was surprised that we didn't come back to get that area earlier today. So I'd be surprised if at least at some point in the next couple days here we get some really good setup off of that 28.51 half area. I was really surprised that we didn't pull back to get it already. And that really shows how optimistic these markets are for whatever reason right now, right? Even after being such strong rhetoric last week from both sides of the aisle on the trade deal. So again, I got my eyes on that 28.51 area, but really what I want to know right now is do we just sink or do we come back and settle in? You know, I think that's the big question right now, right? That's the big question right now. I want to buy down here. But one scenario is we just tank, right? We just tank, right? Trump says something foolish. The Chinese come back and say, we're gonna kill you, all right? We're gonna tear everything apart, right? All the negotiations are over. The market tanks, right? We tank down to that low, right? We're now sitting on some key support, right? We've got our Friday close, right? We got that trend line. So I want to be a buyer here, but now that momentum is just so darn strong. So how do you buy when it feels like the end of the world's coming out? What you want to do is you want to first put yourself in the shoes of the sellers. Give them the benefit of the doubt. They're going to probably try a couple times to get that next leg, right? Because anytime you see a strong move in one direction, you're going to probably see another leg in the same direction. Right? So you want to give them the benefit of that doubt, and they're probably going to try a couple times, right? They're probably not going to give up. Like this one back here, good example, right? They run lower, not a lot of momentum. The sellers try to sell off the moving average, and, they're not going to put up much of a fight. There's not much momentum for the bears, right? In this shallow pullback earlier, it was all buyers. It was very little sellers that were there. They never had a chance there, right? But if they can make a move going lower here, if we can get a real strong run lower, now those sellers, they're going to say, see, I'm going to show you. They'll try once. They'll probably try it again, right above that high again. Once we get those sellers trying once, trying twice, then I can look for that buy now going back up from there. Again, we call this a nested variation of a failure pattern. Nested being the term for inside, right? There's a pattern inside of another pattern, right? It's a nested pattern. Now, if I'm wrong about that, right? What if we get stuck back inside the range a little bit? Then we make the move lower. See, now it's just not as momentous now. Now it's not as strong, right? It's like this one. We go back down in, we chop around, right? We make the run, they fail, and right back in. That's exactly now what we're thinking here for tomorrow as well. So if they get stuck inside this range, right? If they kind of get stuck inside that range, that's gonna throw cold water on the bears. And of course, we'll wait for those sellers now to try to sell off of that moving average. If they fail, we're right there now to buy right into their failure, right? A very easy setup. And again, the difference is do we slice and dice lower If so, one try for the bears, two try for the bears, and back up? Or do we kind of sink in, sit here for a while, and then make that run lower? If that's the case, I just need to wait for those sellers to try to sell off that pullback, right? Once those bears try selling off of it, now we know exactly where those stops are going to be. And if we get lucky, we might get that failure into pullback combination. It all depends on kind of how big that pullback is. You can see an example right here, right? Here's a failure. This one was very tight, obviously. A failure into pullback combination right there, right? So look for that same thing, right? That failure into pullback, if they get stuck inside that trading range. Now, how do we try to break out on this? What would a breakout look like? So we talked about buying off the low. What about buying as the market goes higher? Well, first of all, where are they trying to go? They're trying to go back up into that range up top here at 29.28, 29.20. This area, that's where those buyers are going to want to go tomorrow, right? Yeah, you got 2,900. That'll be a little pit stop there, but I would imagine, right, that big old high up there, that is definitely where those buyers are going to be hunting for in the medium term here for tomorrow. So we kind of know where they're trying to go. You always got to make sure you know where they're trying to go before you go trying to trade them. How do we trade it though? What do we need? There are two patterns to watch for on a breakout. One of them is going to be that 1, 2, 3 breakout, right? If I can get these buyers to hold that pullback and jump, well, perfect. Now we're bullish. We're already bullish. Now we're breaking out and we're bullish, right? Now mark up that high down to that low, and looking now to buy off of that low, right? What do we call that? We call that a 1, 2, 3 breakout into a hidden channel pullback. And it's not always a pullback. Sometimes my favorites are the traps, the seller failures, right? Those entry patterns that we're going to talk about in that free trading course. Again, if you want to learn all the entry patterns, right, grab that free course in the upper right-hand corner. But what's the more aggressive one, right? What if the market really jumps? If the market really jumps here, it's that 1, yes, that 2, right? 1 try, 2 try, 1 try, 2 try, and back up from there, right? Does that make sense, right? So if we see that thing, if it just rips higher here, right? If it just rips higher here, I'm looking for the 1, I'm looking for the 2, right? I want to see 1, 2, and then again from there, think about it this way. The first pullback is really just buyers taking profit. Second pullback are the actual sellers. That's when you know where their stops are. And once you know where those stops are, now you can buy right into those stops. Target is up at that 29.20 area waiting overhead. So now we know what a good breakout pattern looks like. We know what we want to avoid tomorrow. Stay away from that range. And if the market collapses here, don't be so sure about those sellers, right? Wait for them to hold. Then you can call this a bear market, and then you can sell off the top, right, with that 1, 2, 3 reversal. But very careful trying to sell this market, right, just because it pulls back here right now. It is overall bullish. Over on the Nasdaq right now, Nasdaq is in a very similar scenario here on the NQ, very similar to the S&P. It's a strong move up, right, into a trading range. It's a bull market. It's a range-bound market. I want to buy low. I want to sell high, right? I want to buy low. I want to sell high. So buying low, selling high. It's a bull market. How do we buy the market right now? How do we buy it? We don't want to trade inside the range. We want to stay away from that range. So really it all comes down to, do we run back into that trading range, balance out inside that range, and then make a run lower? If we do now, that momentum will not be nearly as scary, right? It'll be a lot like this one. Strong move down, bears try to sell off the pullback, right? You got your failure into pullback combination, right? Same thing here, right? Failure off the moving average into pullback combination. Again, like I said earlier, sometimes we don't get that pullback pattern. Most of the times that we will. It all depends on, right? It all depends on where we are inside that range, right? We don't want to trade inside that range. Or if it just slices and dices and runs lower, now you've got to let those bears, right? Give those bears the benefit of the doubt. Let them try once, let them try twice. And then once we've got those sellers with that rope, right, wrapped around their neck, right, that's when we can start buying into that failure. Hopefully that makes sense, right? So if we do get that run lower, if we do get that, right, that big run lower here, I'm going to look for those bears to try once, look for them to try twice, and then once we see those bears trying twice, then I'll look for that buy going back up. And again, the difference is momentum, right? If we don't have a lot of momentum because we sit inside this range once, twice, all I got to do is let those sellers to sell off that moving average, and I can buy right into their failure. But if this thing just tanks, right? If it just tanks off that high, I'm going to be thinking now, okay, let's give these sellers some breathing room here. Let them try once, let them try twice, and we can buy it from there. And again, the reason why I do that is because a lot of times that strong move down, the moving average comes over, and these sellers, because it's so red hot to the downside, they're coming in with guns blazing, right? And they're selling off that moving average. And of course, if they get that strong reaction off the moving average, that's a 1, 2, 3 breakout. It's also a 1, 2, 3 reversal. I'm going to mark up that low, mark up that low, mark up that high, right? And that creates our new hidden channel. And we're looking for whether it be a pullback pattern, a trap high setup, right? A failure, a buyer failure. It doesn't matter. We're simply buying right off the high of that hidden channel. The buyers, of course, right? The buyers want to get up, just like the S&P. The buyers want to get up around that 7,700 area, right? They're going to go 1, 2, 3 breakout, mark out that high, mark up that low, right? Mark up that high. 1, 2, 3 breakout, right? So that's 1, 2, 3 breakout. That is by far my favorite of all of the breakout patterns. Or it's that strong run up, right? Remember, got to be real strong on that one. 1 try for the bears, higher high now, and then 2 try for the bears. We call this a 2 try breakout, right? 1 try for the bears, 2 try for the bears. First try is profit taking. Second try are actually short sellers, and we're running up, right, to retest that high from there. And then again, we talk about the sell side here as well, right? Sell side, how would I sell off this high? What would be a valid setup for me now to sell in a bull market? Of course, you could apply this to the S&P as well, right? What was that reversal pattern called? The crown reversal, right? We got 1 try up. I'm looking for a lower high, a lower low, and a trap high for that crown reversal. Now, obviously, it's the higher we get this, the better, because that will give you a good risk-reward ratio, right? And that's why you want that trap, right? You want that trap, and you can see an example back here, right? We go up, the buyers pull back, right? Buyers pull back, lower low, they try again, little trap high right there, right? And back down we go. What you're looking for is, you're looking for that trap, right? You want that trap. And that's exactly what we're looking for here to sell it, right? As we go higher here, buyers try once, buyers try twice. It is a bull market, which is why we have to be on our extra best behavior, right, to sell off that high. Because the last thing we want to do here is we don't want to be selling right into where those buyers are trying to buy, right? And we have a feeling that buyers are going to shy away from buying high like that, right? So you want to be selling where those, right? You want to be selling where those buyers don't dare buy, basically, right? You put yourself in that little tiny corner, right? The buyers, remember, the buyers, they're going to buy down here. So that's why you don't want to sell down there. Okay, buyers aren't going to buy right above that high. Well, there'll be a couple, but they're not going to be enough to really move that market too bad. Those will be rookie buyers buying up at that high. It's the professional buyers, the buyers buying those dips. Those are the ones we got to worry about. So we protect ourselves against those buyers. We let them get in. We get that trap, right, and then short it back down into that range. Buyers try once, buyers try twice. Trap high, right? Lower high, then trap high, and back down in for that crown reversal. Crown reversals are, as you can imagine, they're not as common because they're reversal patterns, but boy, we see a lot of them, and I've got a lot of examples of them inside that free course that I mentioned earlier. You can also grab that big red button we mentioned right below the video tonight on the blog to join that free trading class. All right, Nasdaq's in the books here. How about some gold right now? So I think out of all the markets tomorrow, gold might be the most challenging, just because I think there still might be a little bit confusion here as far as what exactly or who exactly has control. So let's break this down here for a moment. What do we know? We know that we ended last week on a red hot tone here for those buyers. If you recall last week, if you recall last week, earlier in the week, right, the U.S. imposed some more sanctions, and then late in the week on Friday morning, China came out and says, well, I'll take your sanctions and raise you a couple $100 billion in sanctions, and they slapped on some sanctions on Friday. And that didn't exactly go over very well in the media, did it? President Trump in the U.S. did not approve of that. Of course, the editor of the the Chinese Times, right, of course, took offense to it and came back. And so by the time that we were done on Friday, we're thinking, oh my goodness, that got really bad in a very short period of time. So that explains why, right, this market kind of blasted. No wonder. I'm surprised it didn't go higher, right? Everyone thought World War VI was going to happen, right, off that bickering back and forth. But then, of course, right, as the Asian session opens up and the U.S. session starts to open up, of course, right, Trump's at the G7 summit right now, but, that guy never sleeps, right? So he chimes in, right, and they start talking back and forth about it, and everything kind of calms down, and the market settles in. So we know that long-term bullish, we're very bullish right now, but it's tough to call this a bull market in the short term. It is very much a bear market right now into that trading range. So what I'm thinking here is with all of this bullishness, right, anything that comes lower is going to be ripe for a buy. Even the sharp moves here, unless they hold the pullback, right, unless they get that 1, 2, 3, I'm definitely looking to be a buyer here on pretty much all the pullbacks here, and we'll talk about these specific types of pullbacks here in a moment here. I definitely want to stay out of the range. And I'll tell you, I'd love to see if I could sell off this high, right? I'd love to see if we can get a pop higher, get some of these buyers to try to force it, because there's going to be a lot of buyers here who are going to try to force it as it goes higher. They're going to think they're trying to retest that high. But the real clue here is this range. The range really is the clue. So you really could look at this as a very neutral market almost. The short-term sellers are a little bit going to cancel out those long-term buyers. But I will tell you, there is certainly a bullish bias in my eyes. So I'm gonna of course plan accordingly because of that. So I want to buy low, I want to sell high, and I want to avoid that middle, right? I want to avoid that middle, very narrow range. I want to buy low, and I want to sell high. And again, I'm going to give a little bit more of the edge to the buyers right now, right? I'm going to give a little bit more of an edge here to those buyers just because of all the stuff going on out there in this world right now. So how would I be a seller right now, right, in a bull market, in a slightly bull bias market here? I'm looking for the market to go up, right? And what's the best way now for me to sell off that high? I'll use that nested, right? On a faster time frame, obviously, we'll look for the buyers to try once, we'll look for them to try twice, and we'll look to sell off of that high. Now, I don't necessarily need to trap on this one, but I do really want to see this market try to go up, get that moving average coming over, let the buyers try once, let them try twice, and then once I see those buyers, right, once I see them trying once I see them trying twice, again, the reason for that is I'm just trying to make sure that I give those buyers the benefit of the doubt on this, because you can easily see here, right, we could easily try to make a run back to that high. The range is most important right now, though, right? I want to buy low, sell high. So as you run up, right? I'm a little more conservative here with a sell, 1, 2, and then down from there. Now, as we try to be a buyer off of this, right? How do we buy off of this low? It really all depends on how big the pullback is. If it's a relatively shallow pullback here, moving average comes over, I'm going to look for that seller failure into that pullback combination setup, which we cover in great detail inside of that free trading course, right? That failure into that pullback setup, right? Inside that battle zone. But if they really shoot lower here, okay, and this will be, of course, before they hold the pullback. If they really shoot lower, now again, I do want to be a buyer long term here, but I've got to respect those bearish, right, momentum sellers. 1 try for the bears, 2 try for the bears. Let these sellers now, right, give them the benefit of the doubt again because it's such a strong pullback, right? Once we see those bears try once they try twice, then I can be a buyer now going back up into that trading range. So just because we want to buy as it goes lower doesn't mean we just wait for a market to go lower and buy it, right? If it's a shallow pullback, it's going to be a failure into pullback combination. And again, that will come right off the moving average. Or if it's strong move down, again, before with a reversal, it's a 1, it's a 2, and a buy up from there. What do we call that? We call that a nested failure pattern, right? Now, I know what you're thinking. What if we do get that reversal? What if we do get the 1, 2, 3 reversal? Well, that's great. Now we know the market's bearish. We know we're now going to try to find that new hidden channel now. I'm going to mark up that original low, mark up these lows, mark up that high, and we'll go looking here now to sell off of that high, right? And we'll sell off that high with the goal of finishing off that pendulum swing. Now, there's a good chance, too, that overnight we may see this market just dump, right? There's a possibility for that. I mean, look what happened, right? Look what happened before. So if the market does just dump lower here, I know where that target is. What other option can I use? I would choose to use a 2-try breakout, which would be a 1 try for the buyers, a lower low, and I'd really like to get a trap on this one just so I'm not selling so close to that major objective, right? Again, the first pullback will be sellers taking profit. The second pullback, though, will be the actual buyers taking the positions. We'll look for those buyers to get that trap high, and right when I see that big, nice signal candle coming off that trap, right, we'll sell into those stop losses for a retest of that low. So we got a pretty good plan here right now. Same thing's true for the upside, right? 1, 2, 3, breakout, going higher, mark up that high, mark up that high, mark up my low here, and we're buying again that 1, 2, 3, 1, 2, 3 breakout into hidden channel pullback, right? That's a relatively easy one there. Or strong move up, 1, 2, 2-try breakout, right? And then up from there, right? So just make sure just don't chase it as it goes higher, because a lot of times it'll go up and then pull right back and collapse back down into that range. Just don't try chasing it after that market runs higher. So gold's looking pretty good. Just stay away from that range. Buy low, sell high. And don't forget, right, I'm drawing the charts tonight here, but tomorrow morning we'll be in our trade room and we'll execute the entire plan together with all of our clients, because as you can see, the strategy itself is pretty easy. It's a lot of the same stuff. What's not so easy, though, is actually going out and applying it right on a moving market. And that's why our trade room is such a big advantage for all of our clients. Last but not least here, over on the euro, we had that big jump up on Friday, right? That was in the wake of Jerome Powell speaking on Friday morning at the G7. And then, of course, we have that strong 1, 2, 3 reversal. Now, anytime I see a 1, 2, 3, I'm always going to try to find that hidden channel. We know we're bearish right now. Momentum is definitely bearish. We're a good 60% off of that high. Momentum is shifting. And so really at this point right now, I'm trying to find that high of that channel here and trying to be a seller off of that high. And as you can imagine, that pattern will be relatively easy to find with a failure pattern. If we do keep going lower here, I've got that measured move. I'm waiting here as we go. So let's talk about this for a moment. I know we're bearish. I want to be a seller here on the euro. What I'd like to do is I'd rather not sell that low right now. I'd rather wait for the market to come up for me here, get that moving average coming over, get these buyers to think this market is turning directions, right? Get those buyers to chase after it and try to buy that pullback, at which point now we can look for that failure into that pullback combination, right? One of my favorite combo setups, a failure into a pullback combination. Again, that will start off with a pullback up around the battle zone, up around the top of that channel. The moving average, of course, will come over. Buyers will try to buy that pullback, right? Buyers will try to buy that pullback. Now we know exactly where their stops are. I'll look for those stops to get run, selling into those stops. And then, of course, we got that sell, right? We got that sell there off the pullback as well. So that is something, right, I'm looking for here tomorrow. Another kind of thing you want to look for here is, as we pull back, is do we get stuck inside of this range? If that's the case, if we do get stuck, you'll notice I've kind of marked this thing up here as kind of like a pending range right now. If we go back up and we kind of sit here sideways inside of that range, I'm going to have to make a slight adjustment on this, because now I'm going to want to get the 2-try failure, right? We're going to want to go up 1 try for the bulls, get that moving average coming over. Buyers will try to buy the pullback off the moving average. It's a range, so it's not a great place to be buying high. We will be looking for in our trade room to sell off of that high and run it back down again, right? Nice strong signal candle to sell off of that high. And then don't forget, right, they may turn right around and reverse this thing for all I know. I mean, it's a pretty hefty pullback off that high, but it's not that bad. You know, it's probably what, 60, 65, maybe 70% off that high right now. So it's not, it could, right? It could definitely turn around here. What would a reversal look like? A reversal would be a 1, 2, 3 reversal, right? Jumping off that moving average. That's the key. You've got to get some momentum coming off that moving average. Mark up that high, mark up that high now, right? Down to that low, mark up that channel low. And we're trying to buy the low of that channel. Where's my target? My target, of course, is back up to retest those highs, right? The target, of course, at that point is back up to retest those highs. So that's going to be the turn in the trend. What if the market keeps going lower here? Then what do we do, right? You know, what if we don't pull back here? What if we keep going lower? If we keep going lower here, I'm just going to keep on adjusting. That's all I'm going to do. I'm going to keep on adjusting. I'm going to keep looking for that same failure, right, into pullback pattern and finish off that measured move. If we do get, right, let's say we run down to that measured move here and we start sitting here for a bit. Okay, a lot of times we do get trading ranges around measured moves. If we run to that measured move, the measured move is a major objective. I'm looking at that point now for, again, a 2-try failure pattern, right? You want to, again, anytime you find a range, you want to sell high and buy low. I can sell high by using that 2-try failure, right? I can buy low by using that crown reversal, right? Remember that one from earlier? That crown reversal. So you can buy low, sell high. It's just you want to use slightly different patterns based on what? Based on the market's momentum. If we're bullish, I can be a little bit more aggressive than I can if I'm right, than if I'm trying to be a seller, right, in a bull market, right? So, if we're bearish on this, right, if we're bearish, I can be a lot more aggressive than, right, being a buyer in a bear market, so to speak. All right, guys. And again, tonight, I know right now this has probably been a fire hose of information right now, but not to worry, because tomorrow morning we're going to get together bright and early, 8 o'clock Eastern time, and we're going to do the whole thing together, because every morning we open up bright and early and we trade the strategy together. Because in my career, or in my experience, what I've learned is that the strategy is simple, but it's a lot easier if you've got me to kind of look over my shoulder and do it right there with you. And we'll do it tomorrow morning at the opening bell, starting off at 8 o'clock Eastern time. So make sure you come out and join me tomorrow morning at the opening bell as a brand new client. It's very easy to get registered, right below the video here tonight on our website at schooloftrade.com, you'll find a link to register as a brand new advanced member. If you're on our YouTube channel right now, I'll put all the links in the description of the YouTube video. If you're on the blog right now, head on below, follow that big red button, and that will take you over to our website, as well. But grab the advanced course right below me here on the video tonight. Get registered, and I'll see you tomorrow morning at the opening bell. If you're not ready yet for membership, definitely take that free trial. The free trial has a free pass to attend our trade room. It's got our free trading class where you'll learn our 3-step strategy and our 4 favorite entry setups and hundreds of hours of how we apply those setups to our favorite markets. You'll love the free trial, the free course, the free pass. So grab that. And don't forget, guys, again, when you register, whether it be for a member, or a trial member, you're going to check your email, and sometimes that welcome email gets stuck in your spam filter, so check there as well. If you have any questions, guys, don't forget you can always email, call, use that toll-free phone number. We got live support here in the lower right-hand corner, so I'm always here on live support, on email, on toll-free phone, or on Skype. But that'll do it for me tonight, guys. Excellent day today in the trade room. Hope you guys had a great day. Hope I see you tomorrow morning with me at the opening bell. If not, we'll come back and do it again, same time, same place tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.